Hello, everyone. Welcome to my podcast. Today we have Kevin Sankar from Pineapple Insurance.
Hello. Hello.
Yeah. So, just a little bit about yourself. Introduce one or two lines.
My name's Kevin, and I've been in the industry, well, finance, insurance, uh, mutual fund mortgages,
Yeah.
for quite some time. 9 years with starting, and yeah, it's 9 years now. Nine
Oh,
years now. Yeah.
that's a long time.
Yeah.
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 Okay.
Yeah.
So, I would like the audience to know you a bit better.
Yeah.
Okay.
Okay.
So, first question: if calories did not exist, what would you eat for a whole day and from where?
Whoa, that's a good one. Listen. I love my Burger King with poutine combo.
Okay.
I also love Harvey's got a wicked poutine as well. So I guess I'm a poutine guy. That's
That's all if
I
no
love.
calories existed?
I don't know. Like I love pho. I love soup.
Okay.
I don't know. I mean, I don't think I'm not a big cake guy or sweet guy. So, in from that perspective, I guess it doesn't matter too much to me.
Okay, if I want to break it down from breakfast to dinner, what would you have in your breakfast?
Breakfast.
Yeah. And from where? No,
Udit, I
even
don't even
home food
Udit,
doesn't
I don't
count.
eat breakfast, man.
Don't eat breakfast? Come on.
Yeah, I like simple, just eggs Benedict. I like eggs Benedict.
Oh, okay, nice.
I like eggs Benedict once in a while. With salmon, salmon is good. Salmon, smoked salmon, eggs Benedict, wicked.
Okay,
Yeah.
okay.
And then for lunch, um, I also love curry
Okay.
chicken. So curry rice chicken. I'm from Trinidad, so
Okay. You
uh,
don't look like you're from Trinidad, though.
yeah, I'm from Trinidad. I was born and raised there. Came here around 15 years old, I believe.
Nice.
And yeah. And then for dinner, lobster would be nice. Lobster steak, surf and
Okay.
turf.
Insurance question. Okay.
Okay.
If you could insure a celebrity, who would you want it to be?
If I say that one more time.
If you could insure a celebrity,
Okay.
who would it be?
Hmm. Insure a celebrity. I don't know. Scarlett Johansson. I don't know.
Okay. We'll call your wife after this.
Yeah. She's gonna see this probably.
Yeah.
Or hear
Uh,
this. Yeah.
okay. One last question about yourself. Okay?
Okay.
Tell us about a hidden talent that we don't know about.
A hidden talent that
Yeah.
you don't know about. You put me on the spot here.
There would be something that's coming to your mind and you haven't
I'm
shared yet.
pretty open, so I mean, you see who I am, anyways. Um, Hidden talent. Pretty good at Monopoly deal
Monopoly deal?
for
Okay.
games. I don't know.
I'm pretty bad at that. My friends tell me that you ruin the game of Monopoly.
Really?
Yeah. It's sometimes it takes too long and then I'm tired.
No, there's a new one. You know that there's a card game they made Monopoly into a
Oh,
card game. Yeah, it's called Monopoly Deal.
oh,
Yeah.
okay.
Oh, you don't.
Oh,
Oh,
I
yeah.
haven't played that yet.
Oh, it's really good, man.
Okay.
I'll get you a pack.
Oh,
Yeah, I'll get you a pack. It's pretty
oh,
fun. But you got to play with your friends. Try it out.
yeah, of
Yeah.
course. Thank you. Okay, we're moving on to the second part now.
Okay.
We'll get into insurance straight. Okay.
Okay.
First question is what are the different types of insurances in Canada?
Mm-hmm.
And what is the main difference between mortgage insurance,
Mm-hmm.
property insurance, and life or creditor insurance?
Mm-hmm.
It's a big question, but take your
Yeah.
time. Yeah.
Um, well, the different types of insurances in Canada. I mean, there's so many types of insurances, and this is something when you're talking to clients, um, and trying to lead them. They don't. They just know. Oh yeah, no, I have insurance.
Yeah.
Okay, so contents, home insurance, title insurance, your mortgage default insurance if you're paying less than 20%. Yeah, your life insurance, your different types of life insurance. There's a whole bunch of different types that
Yeah.
you can do: term, whole life, universal life, living benefits
Okay.
like disability and critical illness,
Okay.
right?
Yeah.
Which is a type of insurance in the event
Yeah.
that something were to happen, you couldn't work. There's just so
Mm,
many.
there are actually a lot.
There's so
Yeah,
many.
there's
Yeah.
so many.
So really, really you want to talk to the client just to make sure that they understand. Okay, you have insurance. You may think you know exactly what you have,
Yeah.
but maybe just go over with them. Maybe have them show you what they have, and then that way kind of um, you can kind of make sure they are properly protected,
Okay.
and they know exactly what they have. Because
Okay.
I find that's where the conversation goes most often.
Okay.
Um, yeah.
So, coming to home buyers,
Yeah.
what are the top insurance priorities you'll say that?
So yeah, so for home buyers, I mean, right from the get go, at the lawyer's office, for example, they will look at into title insurance. They
Yeah.
will recommend that to you, and then they have to go out there and get just make sure that that's covered. Usually, they allow you to choose, or they may have
Yeah.
a suggestion of who the insurer is for that. Also, if you're putting less than 20% down, then you want mortgage default insurance. And
Yeah.
again, that's not something you choose. It's basically the mortgage agent, as
Yeah.
you know.
It's mandatory
Yeah,
under 20% down payment.
right. And as you know, as a mortgage agent, the lender is going to decide which insurer that's going to go to.
Yeah.
And that really is mortgage default insurance protects the lender in the
Yeah.
event that the client defaults on the mortgage payments. Home and contents insurance, you're going to need that as well,
Yeah.
um, prior to your purchase.
And you said there are different types of insurances when it comes to even life insurance. I think the main is term life and universal insurance, right?
And whole life participating and non-participating life
Okay.
insurance. But predominantly, if that's the right word, um, most frequently people would go with the term
Yeah.
just because it's most affordable of the different types.
Yeah.
Um, and yes, it runs out after a specific term, which we choose, but at least that you're covered for that time. And then, at that later date,
Yeah.
you'd be in a much different situation than you are here. So, maybe you might have more savings, making more money, that sort of thing. And then maybe your debt load would be lower in terms of mortgage payments, mortgage loan balance at a
Yeah.
later date. So, right. But that's all stuff we can figure out. Like, you just got to talk that through with your insurance advisor.
Okay. All right.
Whole life is okay too, but again, it's pricier. Universal life also a little bit pricier, but you can build that into a term and then have a
Yeah.
portion where you're actually saving,
Yeah.
have a portion of savings in there too. It's pretty
Okay.
it's pretty cool, but again, it's a little bit more sophisticated than the term.
Okay. Right. So, coming to the cost, like you said, whole life and universal are a little pricier.
Yeah,
Yeah. So, when it comes to the cost of insurance premiums, what are the factors that affect the most?
the cost of insurance premiums. Yes, good question, great question. It's health is the number one, and age is the other one.
Okay.
So those two, depending on where you're at, in terms of age, the older you get, the more expensive the premiums become.
Okay.
It is insurance as a business as well. So, you're closer to that, death,
Okay.
closer to death. Let's just say it. And so the premiums become more expensive because you're paying out with,
Yeah.
um, and they gotta mitigate their risk. The insurance companies,
Okay.
and then health, you're more likely to get sick as you get older,
Yeah.
right? Um, so
So it's
that's the other
basically
thing.
mostly related with the age.
More, yeah,
Yeah.
yes, yeah,
Mostly with the age.
yeah. Age is a
Yeah.
big one, yeah,
Okay.
yeah.
Okay.
Yeah.
I'm
And
going.
also count. I just wanted, sorry to cut you
Yeah.
off.
Yeah. No
Also
problem.
to another thing that comes into play too is family history.
Yeah.
Like we're talking diabetes, for
Yeah.
example, heart attack, early heart attack, early stroke, that stuff, historically in your family, that may come into play as well, depending.
Okay.
So, and honestly, it's worth it to disclose all these things up front because, insurance companies, do their due diligence, right?
Yeah.
Um,
In lawyers' words, I think that would be they'll do anything to not pay the claim.
yeah,
If they find a reason not to, they won't pay.
correct. So just might as well be upfront, and you'll find that there are products out there that you could use if in fact, and it happens from time to time where the person might not get a standard product, but there's
Yeah.
other products that you can use that, and it will pay out. It'll pay out if as long as you're with a proper insurer and you've properly disclosed everything.
Okay, that's nice to know.
Mm-hmm.
Okay. So I'll come to the next question now. So let's say we took a term insurance or a whole life
Mm-hmm.
insurance. Is there an option for the client to switch the insurance provider between that term is going on?
Oh,
Provider.
definitely. But like back to what we were saying about health and age.
Yeah.
Um, if you're going to do that at a later date, most positively, it's going to be more expensive
Okay.
later. Like if you decide you want to switch 5 years later, it's going to be more
Yeah.
expensive.
New insurance company sees it as a brand new insurance application.
Correct.
Okay. Go ahead.
Right now, there's something else that I just want to mention too. With the term portion,
Yeah.
depending on who your insurer is, you can actually convert that term into a whole life portion,
Okay.
either the whole thing or a portion of it, depending.
Yeah. Okay.
So depending on who you're insured, the type of insurance policy you have, you'll be able to
Okay.
make that change. So that's helpful too in the event that you wanted to take care of something like final expenses.
Okay.
How close am I to getting that prize?
There's still some time. There's still some time. That would be our next part.
Okay.
Okay. A few more questions. I
Yeah.
think I'm gonna ask you like 50 more.
50 more. This guy.
I'm kidding.
Slave driver.
Okay. Coming to like average Canadian,
Okay.
what do you think that they should have at least covered? How much coverage does a Canadian need, according to you? Like just the base, just to
Well,
complete the basic.
yeah. Listen, for this interview, I think we
Yeah.
should keep it to mortgages,
Okay.
just for simplicity. So regarding the mortgage, whatever your mortgage loan amount, you have your purchase price, your appraised value, the value of your house. But then you have a mortgage component that
Yeah.
you help to finance for people that you do. So we want to make sure that mortgage loan component, let's say for example for a couple,
Yeah.
with a kid, a family, in the event that one person passes away, they can pay off that mortgage loan amount so that the
Yeah.
other person doesn't have to bear that burden of carrying
Yeah.
that financial expense, right?
Okay.
So yeah, that's what I would say is pretty important. Also adding some sort of living benefit, either with a critical illness, or especially a disability um, component, where
Yeah.
they can, in the event that maybe they got hurt for a certain period of time, they can still pay their monthly mortgage payments,
Okay.
in the event that they were hurt until they heal, until they get
Yeah.
better. So those are things that I would say for the
Okay.
average Canadian, it's definitely worth looking into.
Okay. That's good to know. And can insurance policies be used as investments as well?
So whole life has these types of things where you'd be able to make money in there and then withdraw money.
Yeah.
But really, when you're doing it in a whole life and you're withdrawing that money, it's actually a loan. You're actually borrowing against,
Okay.
right? Which it's not really investing, like But as far as if you were to use something like the universal life that we were talking about, which I mentioned earlier, was a little bit more complicated.
Yeah.
But if you take the time to learn it, uh, there's an investment portion in there which is actually making a fair can make a fair amount of money for you. Um, but the big part about right while you're being insured, while
Yeah.
you have the insurance components, so they're two different components. But the pretty crazy thing about it too is like you can actually save on taxes by going through that type
Okay.
of product. And who doesn't want to save on taxes, right?
Yeah.
Of course, it depends on income. It depends on all these things. It depends, maybe, if you have exhausted your RSP room, for
Yeah.
example, or your TFC or what's this new FHSA room, then you can use that product as something else to
Okay.
as another avenue to save.
Okay, that's good to know.
Hmm.
I think you touched on my next question already. How can life insurance help in illness or disability?
How can it help? Yeah, yeah,
Yeah.
exactly. Yeah. So if you never know when you're gonna get hurt. They say that the saying goes, it's not a saying, it's fact. You're Canadian, they're more likely to become ill or disabled more than like say prematurely dying or dying fairly early. Like it's more likely that they will oh sorry unexpectedly dying, let's say.
Yeah.
It's more often that they would become ill or disabled,
Yeah.
and so that's why it's so important for that disability
Okay.
portion. Now, again, what you need and what you can afford are two different things,
Yeah.
but at least look into it and see what it is what's available to you, what you can actually manage and afford, um,
Okay.
and make the right choice.
Yeah. Good to know. Thank you.
Hmm.
Okay. We'll get onto some advices and some misconceptions now.
Okay.
So, what are some common misconceptions about life insurance that you hear every day?
uh, a big one would be, like I was saying earlier, uh, people often think they have, oh yeah, no, I already have life insurance with my work.
Yeah.
Yeah, that's a big one. Usually employers, you know, it's a group insurance, right? So they're
Yeah.
covering many employees, and so it's kind of like a kind of how do you say, generalized base coverage, and it's usually like 2 to 3 times annual salary, right?
Yeah.
So yeah, it's that's a big misconception. Yes, you're covered, but if your mortgage is 800,000, just talking mortgages again, if your mortgage is $800,000, and you're making $100,000, let's say, that's 2 to 3 times your max is 300,000. You have a shortfall of
Yeah.
500,000, just for example.
Yeah. I
Quick
understand.
numbers, right? So yeah, that's a big one. Another one, the mortgage default insurance. That's the other one.
Yeah.
Oh yeah, I already got that when I signed my insurance papers. Okay, just look into that a little bit further. And then the other one is would be the creditor insurance.
Yeah.
And so credit insurance, or mortgage loan insurance, as they call it sometimes, pays off the mortgage in the event that something happens, but you're paying a premium for that, right?
Yeah.
And as that mortgage, as you pay, let's say 10 years from now, your mortgage loan amount is going to be way less than it is
Yeah.
today, but you're paying the same premium,
Yeah.
right? So that's another thing that I don't think customers, clients, they actually know too much about. And then also, another big one with that is it's not underwritten up front.
Yeah.
So, at the end of the day, when they're actually going to, make a claim, that's when the underwriting happens. Well, you're older, you're less healthy, probably, and other things may have happened, and at that point in time, because you weren't underwritten up front properly, like had talked to a nurse, doctor, that kind of thing, and had the insurers do their due diligence up front, they you could be declined, right? Just like you being a broker and being able to take them to whatever specific lender,
Yeah.
we also have the ability to take them to a different specific insurers. Though we do promote heavily Industrial Alliance,
Yeah.
because they're number one in pretty much personal claims, like, right, and they've been around for a long time. The response times are really really great. Insured as soon as possible, and also um, they're good in communication and they pay out, right?
Okay.
Which is the most
Yeah.
important, I think, for
That's
everybody.
important. Yeah.
Yeah.
Okay. All right.
Yeah.
Next question.
Hmm.
What advice would you give to someone who is a first-time policy taker?
First time policy.
Like who's taking the policy for the first time?
What advice I have for them?
Yeah.
Uh, just ask questions, I guess. Ask questions. do some research online and ask questions. Your insurance advisor should be able to walk you through, and you're definitely gonna have questions. So ask them up front,
Okay.
right? And again, there's many different policies. Some will suit others better than others. So you know, um, depending on what you choose, it may be different from another. So yeah, just ask questions
Okay.
and read through the policy best you can, or go through it with your advisor.
Okay.
Yeah.
Last question of this part. Okay.
Hmm.
Uh, what advice would you give for existing policyholders? What are the points that they should check in their current policy that they are covered enough?
Yeah.
Yeah.
Yeah. So the insurance type, which insurer you're with, the insurance type, um, type being meaning, is it a term? Is it whole life? Is it UL, universal life? Participating, non-participating, the term, if it is in fact a term, how long is that for?
Okay.
What's the coverage there? Sometimes your policy, depending on the strategy, you might have some sort of like laddering where they break up the terms, and like they break the coverage that you need into terms. So like term 10, 20, 30 at a certain coverage. And the
Yeah.
reason they do that is because it may make it more affordable,
Okay.
right? So at term, after 10 years, this amount, 100,000, 200,000, peels off,
Okay.
right? And then now you have remaining for the next 20 years, and then 20 years another bit peels off, and then at 30 years you still till 30 years you have that amount, right, to cover. And it's just a strategy that's used sometimes, and you just want to. That's for an example of
Okay. Yeah.
what they can find. What else? Is it convertible? Can you convert it to a whole life,
Okay.
a portion, or the whole thing? Um, yeah, I,
Okay.
I believe that's
I think one other one that you touched on was group insurance from the employer,
yeah,
and a lot of people just assume that they're covered,
correct.
but are they covered completely?
Yes, and again, like being covered from your employer, that's amazing. What happens
Yeah.
when you switch employers?
Yeah.
Right? So you wanna actually get something to supplement what you have, but also, is it really supplementing? Like, if you're gonna leave to go to another employer, and that employer is gonna not have any coverage or have less coverage, now you've lost out, and now you're older, and now you have to
Yeah.
go back and get more coverage. So maybe, realistically, if you're a little bit, if you're at a decent age where the value of getting it um, is just right for you at that point in time, maybe it's best just to get it then. And now you're paying the least you'd ever pay for it
Yeah.
right away. And no matter where you go, employer or lender, you still have that amount.
Okay. That's a good point.
Yeah.
Yeah. Okay. We're at the last part. Okay. You
Okay.
are closer to the gift now. You'll have 5 seconds to answer
Oh
every
man.
question.
I thought I already worked for this.
No, 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 no. So there are a total of 9 questions.
Mhm.
You have to get 5 right.
Okay, let's go.
Okay.
Mhm.
You have 5 seconds. You take more than 5 seconds to answer, you lose that. Okay.
All right. This can be edited after, just so you know.
I don't know. I won't edit this one. Okay. So we'll start. Question number 1. Top 3 factors that determine the cost of life insurance policy.
That what?
Top
Top
3
three factors.
factors that determine the cost of life insurance policy.
Oh, top 3 factors:
Yes.
health, illness, and male or female.
Okay. That's discrimination.
True.
Okay. Second question. How many life insurance companies are there in Canada?
Oh, there's many life insurance companies.
That's not the correct answer. That's a general answer.
I do not know how much
Just a
there are.
guess.
I don't know, 100.
Okay. How many now this one you have to answer it correctly. How many companies does Pineapple Insurance work with?
Pineapple Insurance. We work with all the top insurers in Canada.
Okay.
Yeah. And yeah, Sun Life, Manulife, Desjardins. Like we work with many of them,
Okay.
and all the top ones. Again, IA is our preferred.
Okay.
Yeah.
You're on 2 by 3. Okay.
Okay.
Are medical exams always required to obtain a insurance policy?
Our medical exams.
Always required to obtain a insurance policy.
Uh, health declaration is required.
Okay.
Sometimes you don't need, like you don't. Sometimes the nurse won't come. They may not need. Many may not need that, but you have to answer certain questions.
Okay. Trick question. Who is better, Kevin the mortgage agent or Kevin the insurance agent?
They're one of the same.
Right answer. Okay.
This guy.
How does age impact the cost of life insurance?
How does age
Impact the
so there are actuaries
Yeah.
that are, I guess, tasked with figuring out the risk associated with the male or female, the gender,
Yeah.
with the gender and age.
Yeah. Okay.
And so yeah, that's how they figure that out.
Okay. What happens if the
Way
policy?
beyond my pay grade, but yeah.
Okay. What happens if the policyholder outlives the term life insurance?
If they outlive,
The term life insurance.
then the term would expire. This is why I was saying earlier about the option to convert.
Okay.
Yeah, it's a good option to have.
Okay.
Yeah.
Okay. Next question.
Also, I'd like to add to that. Very important is your insurance provider should be following up with you at least annually.
Okay.
Because as lifestyle, as lifestyle changes happen, at least you can maybe get on top of something, maybe make some changes earlier rather than later when the premiums become more expensive.
Okay.
Just
Got it.
I want to mention.
Can a non-permanent resident get life insurance in Canada?
Non-permanent residents
Yes.
get life insurance in Canada. I would say no.
Oh, okay. Can life insurance be used for charitable donations?
No.
No.
Life insurance.
Can life insurance be used for charitable donations?
No.
Okay, we are done.
Okay.
Okay, how many did you get right?
I think I got all of them if you ask me. Plenty is a word.
2, 3,
Plenty is
4.
an answer.
Okay, you got more than 5. You had 2 wrong.
What's 2 wrong? Okay, what did I get wrong? Tell me.
Number of life insurance companies in Canada and non-permanent residents can be insured.
Non-permanent residents can be insured in Canada.
I'm one of them.
Yeah, eh?
Yeah.
Non-permanent residents can be insured.
Yeah.
So, what's a
So
you know what I mean? Like landed, not like landed.
So when I came to the country, my friend introduced me to an agent. He got me the life insurance.
Mm-hmm.
Yeah.
So what was your status?
I was working.
So on a work permit?
On a work permit, yeah.
Really?
Yeah.
Wow. I did not know. I just learned something today. And the other one, how many insurance providers
don't
are there?
ask me.
Yeah.
I don't have the exact number.
This guy, but he gave me a wrong answer.
I know it's not an exact 100.
Yeah.
So
All right, fine.
Okay, that was it. Do you have anything else to say to end our podcast?
No, this was fun. Thanks for organizing it. Thanks for inviting me. I appreciate it.
Thank you so much.
I'm glad my brain was working. Rapid fire questions.
Okay, so
Yep.
what I'm gonna do is I'm gonna put our contact information below every video and on YouTube. So if anyone wants to contact us, they can.
Okay, awesome.
Thank you so much for joining me.
Thanks for having me. Then appreciate it.
Oh, just a sec. This is your gift. You won.
Yay! Wow. Okay, I'll share this with you.
No, I'm good. Thanks.
This is a lot, man.
No, the calories don't exist for you. It does for me.
Thanks. Appreciate it.